Hey guys, welcome back to another week where we're going to do a technical analysis here on Wednesday. So I'm going to break down the markets, do a recap of what we've been having since last week. Since my last analysis last week, I remember I told you guys I didn't have any trade running. So far, still no trade. Markets have been moving, waiting for a clear entry, clear pattern for things that I wait for, but not yet there. So I'm patiently waiting. Part of making money is in the sitting, okay? So being patient and waiting for the money to come in and then you take it, okay? So that's what I'll be watching. I'll break down the markets, look at the pairs that we normally look at. If you've been following this page, this channel of ours, you'll understand the pairs that I normally look for. I'm quite consistent on the pairs that I look at, so I don't go diverging or going out of my way to do other analysis. I like sticking to what I know because I've specialized in that. So I look at Aussie dollar, look at gold, look at Dow Jones, and look at USD CAD, and then we'll end it there for today. Maybe I'll just look at also dollar index to look at the dollar strength, relative strength across the board, and then end it there. I don't have any yen pairs, I don't do that. I don't have any pound pairs, I don't do that. I don't have any euro pairs. So for the people who analyze that, the best day to get that analysis is on Monday, where Ken does that analysis because he covers the yens and the euro and the pound as well. Hey everyone, what's up? Welcome to today's analysis. We haven't had an analysis for quite some time, but anyway, here we had a bit of technical stuff on our side, but here we are. Welcome to today. I'll break down the markets as usual. As I keep saying, if you've been following my analysis, you know what we're going to talk about, the usual pairs I look for. And as a rule of thumb, I like saying it here, saying it from time to time. When I'm analyzing the pairs, I'm not analyzing to give any signals or anything. It's just for you guys to understand my thought process, my trades that I have running, how I'm managing them, or when I don't have any trade running, how I'm sitting out and managing myself, because that's equally important. So that's what I'll cover today, because I don't have any trades running, though I'm watching a few markets here and there. I was expecting a trade on gold, but didn't really come to my entry, so I'll break that down and show you what I have. Rather, it's been moving further down. I've been expecting that move to the downside, but I was waiting for it to move a bit up, and then I get a trade, and then I sell it, but instead market has been moving further down. So I'll cover that, and then we'll end it there. Fundamentally, this week, we don't have much happening. Most of what we've been seeing happening this week is we're going to have a lot of talks from what are they called? The bank governors, the Feds. I remember RBA, that's Reserve Bank of Australia, on Friday, and I believe also England and ECB. So we've been having Fed talks mainly, okay? But the thing we've been watching for the past few weeks, especially last week, was interest rates. We saw the interest rates were increased last week by 75 basis points, which is quite an aggressive move by the Feds, in order to help curb the inflation that is going on around the world, and not only in America. We are witnessing it everywhere. Here in Kenya, you're seeing the oil prices going high. Unga has gone up. Most things are going up, okay? And I'm sure many people's rent have also increased if you pay your own rent, because it's a worldwide stuff going on, so we have to pay attention to it. But apart from that, let me not say much. We're here more for the technical analysis, so let me get straight into that. But it's also important, equally important, to follow the fundamental side of the market, just to understand the world, an overview of what is actually happening around the world. Cool. So if you have any questions, please ask in the chat room, and I'll finish and answer them towards the end. But apart from that, let's look at gold. What was I looking for? I was looking for a third trendline bounce on this one, okay? So remember, my form of analysis is very technical, okay? I don't use a lot of indicators. It's purely technical, chart patterns, price action, key levels, and trend lines. So that's what I'm normally looking at. So what I was looking for on this one, I was looking at this trend line. So this is the 4-hour chart. No need to go to the daily, because it's more or less the same one. You can see we had a bounce here, bounce here. I was sort of waiting for sort of a flag correction with a bounce here, sort of like what we got here. You can see this impulse, this ABC correction that moved to the downside. So sort of the same thing here, though it's a more shallow flag, but I was still waiting for such a pattern. This A, B, I was waiting for a C here. Market didn't really actually get to that point, and I was seeing markets quite trying to break below an important key level, which is, let me do away with this. I don't need it. We're trying to break below this level, the 18. We're not even trying. We've actually broken below the 1830 level. Okay, so this is an important level you need to pay attention to. Market has broken below it, and now I want to see if we can remain below, break back above. So on this one, I don't have any other trade. I was waiting for market to push to this upside. I at least push market down. My target was looking to push market down to the 1800. That was the target at first, but now I don't have anything running, so I'm actually seated out and watching this one, not forcing anything. 4 hours is my main time frame that I'm normally looking for my trades. I call it my TTF trading time frame. Okay, the daily acts as my HTF, higher time frame, and the 1 hour chart acts as my LTF, which is the lower time frame where I'm normally looking for entries. So when I don't have any pattern on the 4 hour chart, then I'm not really forcing anything. I won't look for it on the hourly chart, because on the hourly chart, as I keep teaching in the course, it's very, very erratic and very noisy, so I want to avoid that. So I pay more attention to the 4 hour chart, which is more significant. Okay, so that's what I'm watching on this one. You can see basically I don't have anything running. I think Ken covered this analysis last week. I think he has a trade running on this one. I think it's quite short as well, but I'm not sure. We don't, here at the Financial Hub, we have different approaches to the market. So sometimes our biases or our analysis might also be opposite, saying different things. Okay, so basically that's what I'm watching on gold. When it comes to Dow Jones, we had a crazy drop last week. If you have been watching the market fell all the way from around 33,000 last week all the way down to 29,700. Quite a big move. That's about how many pips are those? Quite a big move to the downside. 33 to more than 3,000 pips to the downside. Quite a heavy move. Okay, so that's what we got last week. If you look at the daily chart, because it's the one, you can see last week we had a strong move to the downside, moving market all the way to that level. Okay, so remember, I was watching these kill levels. As I keep saying, I'm watching kill levels and trend lines. So I was looking at this support. When we broke above, I expected it to act as a support. What happened? We broke it below, and I keep saying this and I'll always say it a lot. When we're breaking key levels, you want to look at the significance in the momentum market is breaking up below or above those levels. Look, for instance, this was a support. Look at the break. The break was strongly to the downside. Look at the break back above, strongly to the upside. Look at the break back below, strongly to the downside. Same thing here. This was support. Look at the break to the downside, strong break to the downside, strong break to the upside, strong break to the downside. So such things confirm that this level has been broken, and let's say if you are long here, this is a good indication that you need to start taking your profits out and come out of that trade, and maybe even turn your bias and go short on that. Okay, so the level I'm watching on Dow is the $30,000 mark. Okay, it was a significant level before pre-COVID-19. Here we were, acted as a resistance level. Market came and also broke above it to the upside, then acted as support, and that's sort of where market is coming back right now. Markets are down, I think, about 20% year to date, ever since the highs at 36,009. Let's say more or less 37,000 if you round it off, and now market is at 30,000, more or less around that region. Okay, so it's important to pay attention to that. Market is down a heavy percentage, and this not only this. If you look at things like Nasdaq, US 100, okay, you can see it's also significantly down. If I use my tool to see, if I use this tool, you just press shift and click on the screen. Okay, so looking at this distance to move to down here, I can see that's a 34% to the downside, 34% drop. Quite a heavy drop on stock markets. Stock markets don't easily just drop that quick, and more or less, if we end the month, we will end the month still down like this, it will be officially that the world is in a global recession. Okay, which is a normal cycle in the markets, not that it's new or anything. It's just that markets have really corrected, taking in that inflation numbers and trying to control it with interest rates. As a rule of thumb, when interest rates are being increased, people are not borrowing a lot of money, so people are investing less, and that's what you're seeing now, and that's why people are taking their cash out, because there's more money to yield from bonds and interest rates. The interest rates on the cash, okay, on the dollar. So that's why we are seeing this huge drop, this Nasdaq, and if you look at US 500, you're also seeing the same thing. Quite a heavy drop. Let's look at this drop. This one is, we've had a 24% drop. So Nasdaq is the one that's leading the way with the biggest drop on the major indices. Okay, So this is what I'm watching. I don't want to be heavily long on this one. You don't want to be against the trend. You can see I've highlighted my lower lows, lower high, lower low, lower high, lower low, lower high. I always mark it with my arrows, okay? And you can see market has formed a new low. So I'm still watching this one. Let's see how 30,000 will be this level will be respected. Okay, it's more or less the 29,500. I just rounded it off, but you want to see how market will be respected at that level. Will we get a break or will we move further up from this point? Okay, so that's what I'm watching on this one. Aussie dollar, we've been talking about this level, the 0.700, okay, the 0.700 level, strong support, been a support. You can see before, okay, resistance was broken to the upside, became support, okay, then market acted as support, then now market came and broke below, and now we're trending below it. Okay, if you look at the 4-hour chart, market sort of this week tried to retest it. Okay, so we came and broke below, tried to break above, market didn't sustain that move to the upside, came back below, and now we retested it. We're sort of retesting it, and market is pushing to the downside. Especially today morning, we've seen market really moving to the downside, and we want to pay attention to that. So the next level I'm watching is this support. Okay, just to witness and to see how market will respect it. There's a high chance the market will break it. Remember, the market is the dollar is in a strong uptrend. So against the board, many pairs are weakening against the dollar, and this one is one of them, and that's what you're seeing here. So this is a clear analysis. I believe we can get a break below this level, but anything can happen in the markets, so I'll be watching that as well. Okay, and last but not least, my USD card. USD card last week I think had the best rally that I've seen in a long time. Okay, you can see this rally, straight rally from this level. We had a third trendline bounce. If you zoom out on the daily chart, you can see this was a first touch, second touch more or less, and a third touch here. Look at that strong rally to the upside, breaking above key levels 1.2620 and 1.2950. okay, now if you can be able to sustain above this level, then I believe this market can continue within this channel like formation. Okay, you can see this bigger picture channel, and we target the 1.330 level around this high side. Okay, in respect to the channel formation. So that's what I'm watching on this one. 4-hour chart, nothing much. Yeah, like I said, nothing much on this one. Market just dangling around here, so I don't have anything much on the USD card. If I look at the dollar as well, I want to pay much attention. You can see market has been a strong uptrend ever since we got this bottom. Look at that, higher low, higher low, and that's where we are right now. Market formed a higher low, created a new high, and now there's a level the market is really struggling to break above, and it's this level, better seen on the 4-hour chart. So you can see this level. It was a resistance. Market broke to the upside, came back below, acted as resistance again, and now market has retested it again, and we're sort of seeing market trying to respect it. Okay, but this is far from conclusion. Okay, it's still 1 hour into the candlestick formation. We have to wait for the full 4-hour candle to close so that we can confirm what will happen after this. If it closes like a pinball like this, it can be strongly pushed to the downside, but like I said, wait for the 4-hour to close before you get any significant conclusion. It can still move to the upside and close. By the time you'll be watching this video, if you're watching on YouTube, you'll have already seen that the market has given us a clear indication of what is happening. Okay, so that's what I'm watching on the dollar. Remember, there's no trade that is taken on the dollar. You're just watching it to see the relative strength index across the board, and we can see it reflecting on things like Euro USD. It's been moving down early today morning, but we're sort of getting a rebound, and the same thing is happening on GU as well. Okay, so basically that's what I'm watching. I think something I need to mention as well, the cryptocurrency market is also in a strong bearish momentum. Okay, like I said, when interest rates are being increased, there's a knockoff of prices across the board, not only on stocks, but many different assets. Okay, because they're yielding much less as compared to the dollar. So we are dangling around the $20,000 mark. Remember, 20,000 was the previous high that was hit before the crash we had back in 18 and 17 around here. That was 2017. That was the previous high. So you can see this level, this line that I have is the line that I'm watching here. Okay, significant, important level. Doesn't mean that we'll just respect it. Market can easily break it below and continue moving to the downside. And that's what I'm seeing across the board. Ethereum is down, Solana is down, everything is in the red. Okay, but this is also good times to be paying attention. Can offer a very good buying opportunity. Okay, like you can see on Solana, I have what I've said. These are buy zones. As long as market is below the $55 mark, you want to be dollar cost averaging around this level. Okay, the lower it goes, even the better. Okay, so you want to be doing that. So that's what I'm watching on these ones, but I don't have anything much to say about that. Something that I was looking at with my partners yesterday, stock markets have quite rebounded, but that was for yesterday. I can't rely on that long term. You can see Tesla, for example, it was up around 10% yesterday. So things are trying to rebound, but still, you can see early on today, the indices pre-market are already down. So you don't want to rely on such moves to the upside. Okay, but anyway, I don't want to go off topic. I think that's what I have for today. I don't have anything much. Just looking at the markets, and it's usually quite interesting. Something that you're also paying attention to when markets are moving quite volatile is the VIX, the volatility index. You want to be looking at that. When markets are quite choppy, just go to the VIX. It will give you a confirmation that momentum and volatility will be quite high. And volatility, is it bad or good? Neither. When market comes and it's volatile and it's in your direction, you'll be very lucky. Ride that wave until where it can reach. Okay, if it's against you also, it's quite a good thing, because you'll quickly know if you're right or wrong. Most of the time you'll know that you're wrong, take you out, and you stay out of that trade. Okay, so that's what you're normally watching, and basically that's it. So I think that's it for today. I don't have anything much apart from that. Like I said, no trade running, nothing. I'm just watching. My challenge is still going on. For those who've been following, I'm still in the MFF challenge. I'm up 1%. I had one trade running, which I came out at 1%. I had a 5% floating, and then markets quickly rebounded, so I came out at 1%. No other trade that I've taken. I'm still sitting and waiting. So it requires patience, and many people don't have that skill, but it's a skill that you practice and create as time goes by. I didn't have it starting off, but now it's quite there, it's quite solid. Okay, so I think that's what I have for today. We'll keep updating you guys, and hope you enjoyed that analysis. Quite simple, quite straight to the point, and that's what we try to teach you guys here at Financial Hub. If you take our course, we try and stress on simplicity. Simplicity is not as easy to attain, but once you attain it, it gives you a much clearer picture of what is happening in the markets. You're not forcing anything. You're quite patient. Like I said, I don't have any trade running. I'm not forcing any pattern, just waiting for that clear pattern of mine to come. So make sure to come and join us, take one of our courses, visit us here at Jacob Towers. We have our classes enrollment going on for July, so we're looking forward to seeing you guys and trade and teach you guys how to trade in the proper way. So that's it for today. If you want to start trading, we've partnered with Paperstone, so be sure to click the links below to start and open your trading account. So that's it for today, and like I said earlier, remember, stay woke, stay financially literate. Peace. Thank you very much for watching Financial Hub's content on YouTube. For more forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.